Good morning to all of you. Today we'll be studying about a very important topic, that is banking sector reforms, which is a part of the first unit of Indian banking financial services. Now, banking sector reforms plays a very important role in the banking of structure of India. Banking revolution happened in India where many banks got nationalized, many of the banks got licensing, or many other banking rules and regulations were changed. So, a banking sector reforms will be studied, will be highlighted in every part, or will be seen by every student who study economics or finance. Now, banking sector reforms it started from 1991, where the most important focus was on the banking financial institutions on and non-banking financial companies, right? The focus was given for those things. The main object was that they wanted to focus and they wanted to strengthen the banking structure in India, right? The banking structure what is was there before that era was not that strengthened, or it was not that having a powerful thing that it cannot be competing globally. So to make it compete globally, or to make it having a proper nature so that it can compete globally, the banking structure reforms came up in India, which was also called as the Narsimha Committee. Now, Narsimha Committee report, they recommended various things, and the report was being submitted by the finance minister of that time on 23rd of April 1998. The main focus, the main object of this report was to have establish a strong, efficient, and profitable banking system of the global standards. All right, the banking sector should be efficient. It should be such that it should be a profitable banking sector in India, and it should compete globally, right? The international banking standards, whatever they are following, same banking standard should be followed in India. That was the recommendation objectives of the Narsima Committee report. They gave various recommendations. We'll study what are the recommendations given by the Narsima Committee. The Narsimha Committee report on banking sector reforms, they give recommendations such as: first is strengthening the banking sector. The banking sector which was existing at that time, it was not proper. It was not what it was not having the capacity to attract the global customers or global clients. So the strengthening the banking sector was the first important objectives or recommendation they made. Second was the asset quality. The quality of the asset of the bank, in terms whether it is a physical assets or you can compare as the NPAs, non-performing assets. So it gave a recommendation on the total assets of a bank. Then system and methods in bank. The system and methods what they are using in bank, on that they gave the third recommendation. Then structural issues. The total structural issues of the bank was the fourth important recommendation passed by the Narsimha Committee. And then last was technological upgradation, was the last issue made by the Narsimha Committee. Now let us go to the first point, which is called as strengthening the banking sector. Now, the Narsimha Committee told that they recommended that the banking structure should be strengthened, or the strengthening should be made in banking structure or the system. The capital adequacy requirement should take into consideration market risks in addition to the credit risk. Right? The capital adequacy requirement has to be made. How much capital is required by a commercial bank? What is the capital adequacy or a requirement they have to make? Then similarly, apart from that, what are the market risk associated with this particular investments? Right? That was the first recommendation they made. Right? Every bank has to know their capital adequacy requirement. With that, the market risk associated with it. Right? This is the first recommendation. Second is risk weight of a government guaranteed advances should be same as that of the other advances. Now, government guaranteed advances are there, which if anybody is getting those advances, what are the risks associated with it, or what is the type of guarantee they are giving, the weight towards that guarantee. Now, similarly, the similar weight has to be given for the other type of advances, right? That is the second important recommendation they passed under banking system. Third important recommendation they made under strengthening the banking system was minimum capital to risk asset ratio be increased from existing 8% to 10%. There should be penal provisions for a bank that do not maintain CRAR. Yeah. So see, the third important recommendation under strengthening the banking structure or a system was the minimum capital to risk asset ratio has to be maintained. Earlier days it was 8%. Now they recommended that it has to increase from 8 to 10%. And if anybody is not maintaining, then there was some penal also provided, or penalty provision for a bank will be provided in form of money, in form of some cancellation of license, in form of some other legal provision was provided for those type of companies, right? Now come back to the second recommendation they made was asset quality. The following recommendation have been made towards the improving the asset quality of a bank, right? The bank asset quality has to increase, or it has to improvise. Now, what are the recommendations they made for it? The first is the ratio of non-performing asset to the total asset should be reduced. What is the ratio of non-performing asset towards the total assets? If it is some ratio like 5% or 10%, let us take is the ratio of the non-performing asset towards the total ratio, total assets. Now it has to reduce. It should reduce from 10% to 5%, 6 or 4%. Year after year it should go on reducing. That was the first recommendation they took. Then for evaluating the quality of asset portfolio, government covered by the advances covered by the government guarantees which have turned stick be treated as the non-performing assets, right? If any government covered advances are there, or if any advances are there which are covered by government guarantees, right? Government is giving you guarantee, and such kind of advances, even if anybody is buying, those also should be treated as non-performing if it is not paid on time. Similarly, for a bank with a high NPA portfolio, the following alternatives approach should be adopted. Right? If any bank has the higher NPA, some alternative should be adopted to recover their NPA. Right? Either they can force the bank, or they can ask the bank to reduce their NPA, or different measures has to be adopted by a bank, right? These are the recommendation told against the asset quality. Then system and methods in the bank. The committee made the following recommendation to improve the system and the methods in a bank, right? They recommended few important points towards this. Those are: there should be an independent loan review mechanism, especially for large borrowed accounts, and system to identify potential non-performing assets, right? If anybody is buying bulk amount of loan or large scale amount of loan, right? In that case, the huge amount what you are taking, it has to be specially seen, scrutinizing has to be done, right, by a special mechanism. Then similarly, if any non-performing assets are there, those assets, non-performing assets, should be identified in advance, so that tomorrow that should not become a bad debt for a company. That recommendation was made. Second, under this system and method is banks and financial institutions should have a system of recruiting skilled manpower from the open market. Right now, the banks and financial institution, they should recruit skilled people only in the staff members. That system was made. Not only skilled, but also they should have good communication skill, good writing skill, or various other type of skill apart from finance and account knowledge, right? Every skill have been seen, right? So that was the second system and method. Third is public sector banks should be given flexibility to determine managerial remuneration levels, taking into account market trends, right? Now some public sector banks, they should be given flexibility, they should be given relaxation while determining the remuneration for the managerial people or managerial remuneration level, who will take into account the market trends, who has studied the market, who knows about market, who studied market risk and returns, lot of knowledge is having. In that case, his remuneration should be flexible, it should change. The fourth important recommendation they made was structural issues. Now, the following recommendation were made under structural issues of a bank. The first was with the coverage of activities between banks and development financial institution, right? The latter should, over a period of time, cover convert themselves into a bank, right? Now, if any development corporation is there, if they are having any activities between a bank and development for financial institution, if any transaction or activity has happened, it should be, if it is not covered under a time, then it should be converted themselves into a bank, right? Themselves into a bank, that transaction has to be converted. Then similarly, banking system should be reconstituted. If the banking system was traditionally, you were following some old system was there, right? Olden days system, those has to be rescheduled or reconstituted, right? Restructured, we can call. The modern system has to be framed with the new changes in the, particularly seeing the market risk and return, some new structure in the banking has to be followed. Then two or three banks with the international evaluation should be established, right? Out of some public sector banks, out of some public sector banks, two or three banks should be having an international evaluation, who will study not only Indian market, who will study about all banking activities, plus they will study about market risk and returns, and even after that, they study about international evaluation of the international market. They will do evaluation of international market. So such banks also should be there in India, who are public sector banks, plus they are doing international evaluation. Then 8 or 10 large banks should be established. These banks should take care of the needs of the large and medium corporate sectors and larger of the small enterprises. Right now, some 8 to 10 banks they recommended that in India should be starting, who will take care of the need of the medium enterprises, small enterprises, even the large enterprises, if they require any loan for the business, housing, right, or they require need personal loan, business loan or corporate loan, such all needs of the different type of the people should be fulfilled by 8 to 10 banks. That was the recommendation. There should be large number of local banks. Now the local banks which are starting should be given licensing more for the local banks also, right? That was also a structural issues which was made. Now, fifth important recommendation they came up was technological upgradation. There should be rapid computerization of banking. There should be modernization and technologization of the banking operations. Right now, after this recommendation of Narsimha Committee report, many banks who were nationalized, or many banks who were there in the urban areas, right, or some cities, they were started to they were started to modernize themselves, or modernization started to happen, computerization started to happen, where every accountant or clerk in the bank, they were managing and maintaining the records manually by writing. But after this report, the technological upgradation started to happen, right? You may see that they were maintaining all the records with help of the computers, right? They were started to make softwares, their own bank softwares were there with the record, the amount was being recorded by the software. Even various things like for counting purpose, there were no machines before that, machines also to count the notes, currencies machines, for that also some different machines. So different technological upgradation came after various those activities. Then the second is banking sector reforms measures deregulation of interest rates. In order to provide operational flexibility and competitive environment to banks, interest rates on deposits and local advances of all commercial banks, including urban cooperative banks, have been deregulated controlled and regulation of RBI on the interest rate has been abolished. Interest rate is allowed to determine independent by the banks. Right? This was also been made. Deregulation of interest rates was made, and recommendation in reserve requirement was made, where as per the committee of Narsima committee, reserve requirement of commercial bank have been drastically reduced. Right, their reserve requirement whatever was there before Narsima committee was more. Now Narsima committee came up with a particular recommendation that they will reduce the reserve requirement. Similarly, measure to improve competitive efficiency in bank sector. Now they started to they came up with a recommendation that every bank should have a competitive efficiency. Right, they should be either nationalized, they should be studying about the capital equity, private sector, foreign banks, insurance companies. Everything was involved in one particular sector to increase the competitiveness. Then prudential norms. The Nasima committee also told about prudential norms for measuring the performance of banking sector. Accordingly, income recognition, asset classification, provision of bad debts, norms on connected lending risk concentration were introduced as per RBI directives. Right, and different norms were made, rules were made. Those all rules, whether it is a bad debts, whether it is provision for bad debts, classification of assets, income recognition, every bank has to follow according to the Nasima committee. That was also passed. Then transparency measures were also the recommendation. For transparency, the banking operation banks are required to disclose their balance sheet with the detailed information as per the norms classified by the International Accounting Standard Committee. Right, their balance sheet according to the group wise has to be disclosed in their audit report, and even if in their website, if you go and check, you can find the balance sheet of the financial institution or a bank.